everyone, my name is Lily. I'm the team leader of Lily Hu's team. Today I'm so honored to have Michelle on the show to talk about what has to be ready to buy your first home ever, except the money part. Hi, Michelle.
Hi, Lily. So I'm Michelle Lawn, member of Lily Hu's team. I work a lot with first-time home buyers, and being a first-time home buyer is unique. It has challenges. You need to get in the right mental state to prepare yourself, and we're going to talk a little bit about all the other things you need to do.
So we all know that in today's market, it is really hard for the first-time home buyer to secure their first ever home. So we're going to talk about that in today's episode. Although the topic says that what has to be ready except the money part. The money part is the most important part. So let's talk about that first. First of all, your down payment has to be ready, right?
Yeah, so when you're talking about your down payment, you're talking about two parts. Your deposit that will be due within 24 hours of getting that accepted deal, which is really exciting, and then your down payment. Your deposit goes towards your down payment. Please don't forget this. It's not over and above. It goes towards the down payment, but it's important that you have that cash on hand. Your deposit, your down payment can come from our RSPs. It can come from parents. It can come from your savings. But it's important to remember that you need to have cash on hand for that deposit.
Yeah, for the deposit, usually speaking, how much we should be put it on a side?
So it's going to depend on the value of the property that you're going after, but
On a ballpark.
if we're talking about a single family home, let's say you need to have $15,000 to $25,000.
I think $25,000 for a single house deposit is a minimum because last week we did a deal, it's around $800, and we put on $50,000 just to secure the deal. The larger the deposit amount in the offer, it makes it more appealing to the seller to show that you are confident in this deal that you're going to close it on time. And for the down payment, it can come from various sources. It can be a gift from our parents, thanks mom and daddy, and also can from your RSP. So Michelle, is there any limitation on how much you can draw from your RSP?
Yeah, so as first-time home buyers, you're allowed to draw $35,000 from your RSPs. It's important to know that you have a time limit to pay that back.
Oh, we have to pay it back?
Yes, you're borrowing it from yourself.
Do we have to pay the interest on the money we borrowed from RSP?
No, that's the advantage.
Oh, okay. And also the other source is from savings. And now you secured your perfect home. You put on your deposit. The house is yours. You have down payment ready. The next thing you are worried about is your mortgage. Everyone knows that you can get a mortgage from all those 6 big names bank: TD, Bank of Montreal, RBC, Scotiabank, CIBC. But which one is the 6th one? I'm always wondering, is that National Bank or Desjardins?
So it would be National Bank.
Okay.
But the best thing that I can recommend to a first-time home buyer is to work with a mortgage broker to shop rates. They can hit all 6 banks, well actually 5 because RBC does not work with mortgage brokers, but they can quote rates from all of the big 5. So you're able to get the best rate. Sometimes it's not even the best rate. It's the best mortgage terms for you. Does that mean the most down, the least down, the smallest monthly payments, the quickest time to pay it off? They're going to work with you to see what your goals are and really come up with a plan that works for you.
Do we have to pay the mortgage broker separately in order to hire them to shop around the mortgage for us?
No. Mortgage brokers, like real estate agents, or buyer's agents, let's say, get paid when the deal closes.
From bank?
From the bank.
Oh, okay. Well, that's something new to know. And so you can get your mortgage from 6 banks or from mortgage broker. What if I'm not qualified for both of them? Do we have another option?
Yeah, so there's B lenders as well as private lenders.
What is B lender?
A B lender is a mortgage institution that doesn't have as strict financial requirements as the banks.
Will the interest rate be higher than the
Yes.
A type of lender?
A B lender's interest rates will almost certainly always be higher. But if you're newly landed in Canada or have a different income structure, you aren't employed by someone where you're getting a regular paycheck, you're self-employed, it may be a better option for you.
For except A and B lender, you always have another choice, which is private lender. But for the private lender, it's more complicated and it's more used in construction. So we're going to talk about that in our next episode. Except your down payment and the mortgage, on closing, you also have closing costs. Don't forget about that. So Michelle, could you mind elaborate us on what kind of closing costs that can we expect it?
Sure. So closing costs are two major components. Land transfer tax, which goes, it's a percentage of the price that you paid. So your real estate agent can tell you what the land transfer tax will be, within a reasonable amount. And then you also have lawyer's fees for closing the transaction. Lawyer's fees are going to also include things like title insurance, title searches. All of that is going to be incorporated into lawyer's fees, but you need to figure probably $1,500 to $2,000 for lawyer's costs.
Mm-hmm. And also one more note here, the land transfer tax, if you're the first-time home buyer, the government can reimburse you the land transfer tax, I think up to $4,000.
Exactly. Now, if you're a first-time home buyer, it means you're a first-time home buyer anywhere in the world.
Anywhere in the world.
Any kind of home, any plot of land, you have to be a first-time home buyer truly. You can't have property anywhere else.
Yeah, talk to your lawyers about the definition of first-time home buyer, okay? Now, the money part is done. Let's talk about the most important thing from my perspective to help the first-time home buyer getting their first ever home ready is your mindset. Because right now, in outdoors market, everyone knows that it's a seller's market. If you're not mentally prepared, then it's gonna cost you longer time to secure a home. As you know that the housing price appreciate in the time of weekly speaking. So the better you secure a home, the better for you in terms of the price that you pay for the home. So when we talk about the mindset, the first thing is that take out a piece of paper, write down what you want and what you need. So Michelle, do you mind just elaborate us on what you want and what you need? Michelle had a classic saying about what you want and what you need.
So first-time home buyers, let's just establish that buying your first home is really about breaking into the market and starting to build your equity. What you want might be granite countertops and open concept. What you need is a kitchen. So we really need to throw things in perspective. You're not buying your parents' house at this stage. You're buying your first home to start building your equity. And you need to start thinking, is it a 5-year plan? Is it a 10-year plan? When are you going to trade up this home? What's it going to be worth? So you can go over all of that with your real estate agent.
And also your real estate agent will be able to tell you that, you know what, this house has some really good bones and structures, which is really hard to buy once you have it. But for those granite countertops, fancy lighting, or some decoration, you know what, it's only a time of money. So you can just take that house and then 2 years later, when you have some cash on hand, change the countertop to whatever you want, or adding on the light, or buying a piece of art. So that's something you also have to consider when you're looking for your first time home.
You're totally right.
Yeah, your first home.